Hello and welcome. Today we're diving into something pretty interesting, how to turn that gold you might have into a brand new car. It sounds like a big leap, right? You've got the asset, you've got the dream, so let's figure out the smartest way to actually connect the two. I mean, who doesn't dream of getting a new car? That feeling of freedom on the open road, that brand new car smell, it's a fantastic goal to have, for sure. But let's be real, the path from just wanting it to actually owning it, well, that's not always a straight line. The financing part can feel like this huge wall you have to climb. All the paperwork, the credit checks, the down payments, it can be a lot. But here's a thought. What if the key to getting that car isn't at a bank? What if you already have it? Like right now, tucked away somewhere safe? And that brings us right to what we're calling the dream car dilemma. We're going to look at how you can take a valuable asset you already have and turn it into the car you really want to be driving. So let's paint the picture. You've got gold, a really valuable asset, and you've got this desire for a new car. The big question here isn't if you can make it happen, but how. How do you do it in the smartest way possible for your finances? Okay, first things first, we need to kind of shift how we think about gold. For a lot of people, it's an heirloom, right? Something with huge sentimental value that's been passed down. And that's super important, but it's also a really powerful financial tool, just sitting there waiting to be used. So in the finance world, there's this term liquid asset. All that really means is it's something valuable that you can turn into cash pretty easily. So your gold isn't just a pretty thing to look at. It's basically financial potential that's just waiting to be unlocked. All right, so you've got this powerful asset. What now? What are your moves? Well, when it comes to using it to buy a car, it really comes down to two main paths you can take. Let's break down exactly what those are. First up, we have path number one, selling your gold. This is the most straightforward option. It's the clean break. You turn the gold into cash, and that cash goes towards the car. And the pros and cons here are pretty clear-cut. The upside, it's simple. You get the cash. There's no debt, no monthly payments hanging over your head. It's just a one-and-done deal. But the downside is pretty big, too. The gold is gone, forever. You lose the asset, you lose that sentimental connection, and you lose out on any future increase in its value. All right, now for path number two, the gold loan. This one's a little different, a bit more of a strategic move. You're basically using your gold as collateral to unlock its cash value. But, and this is the key part, without actually selling it. So you're probably wondering, how does that even work? Well, it's a pretty straightforward process. First, a lender will assess your gold to figure out what it's worth. Next, you'll do some paperwork, but it's usually way faster than for a regular loan. Then, you get the money. It's typically a percentage of your gold's value, maybe around 75%. And finally, the most important part, you repay the loan plus interest over time, and you get your gold back. Simple as that. The number one benefit here is a big one. You keep your gold. It's still yours. Another plus is that these loans often have lower interest rates than a regular personal loan, and that's because your gold is securing it, making it less risky for the lender. But, of course, there are cons. You're taking on debt, and there's a real risk. If for some reason you can't pay the loan back, the lender can sell your gold to get their money back. Okay, so we've got our two clear paths, selling it or getting a loan against it. Let's put them side by side and really see how they stack up. This chart really breaks it down nicely. Just look at the first line. Asset ownership. Sell it and it's gone for good. Get a loan and you get to keep it, as long as you pay it back. Now look at financial obligation. Selling means zero debt. A loan, well, that's debt, principal plus interest. And what about cash? Selling gets you 100% of its value right now, but you lose any future gains. The loan gets you a smaller chunk of cash, but you hang on to the asset, as long as you can handle that risk of default. So after seeing all that laid out, the question really changes, doesn't it? It stops being what's the best choice, and it becomes what's the best choice for me? And honestly, the right answer is completely up to you. It all comes down to your personal situation and what you value most. So here's a little checklist to help you figure it out. Just ask yourself these things. Number one, how much does this gold mean to you emotionally? Number two, realistically, how confident are you that you can make those loan payments month after month? 3, do you see your gold as a long-term investment that should grow, or is it more like a fund for big purchases like this? And finally, number 4, how do you really feel about taking on new debt? Be honest with yourself. Your answers here are going to point you in the right direction. In the end, it really all boils down to one single question. Is this gold for today's dream, or is it for tomorrow's security? Are you cashing it in for something you want right now, or are you holding on to it for a safety net you might need down the road? And that's a call that only you can make. Thanks so much for tuning in.